This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Metal Recycling, September 26, 2016. Last week, some commodity prices rose a bit, mainly due to weakness of the U.S. dollar. U.S. steel production rose last week, which is definitely good news after weeks of falling, as the U.S. economy continues to grow at a slow rate and steel tariffs look to expand. Oil ended up 3% for the week at $45 a barrel and is now flat for the past year at a low level, considering in 2008, oil was 3 times the price at $145 a barrel. The oil rig count rose and has been up for 12 of the last 13 weeks, yet still down an enormous 74% in the last 2 years. But at least it's been trending up slowly, which is positive for jobs and helps bring commodity price stabilization. Iron ore ended Thursday up about 1% for the week at $56 a metric ton. Iron ore is like steel in that it has been down less than 1% in the past year. Scrap steel prices saw no change last week. There is discussion that scrap ferrous prices could decline next month due to minimal scrap exports from the U.S., iron ore being low, making scrap metal substitutes plentiful, and scrap flows into scrap yards are low, but not terrible. Importantly though, low scrap flows remain an industry issue. Hot-rolled coil steel prices remain steady at fairly high levels. Tariffs remain in place, which is keeping prices fairly high. And with scrap prices down, this is a major positive for steel mill profitability. Stainless 304 scrap prices remain steady at their recent highs of about 33.5 cents. With the economy growing very slowly, this is another sign that there are a few changes in many commodity prices. Steel Dynamics, one of the largest steel mills in the U.S., announced that their earnings for the quarter ending September will be a terrific more than double last year, mainly due to increased profit margins, which were due to higher selling prices and lower incoming material costs. This led them to saying what the entire metals recycling industry is dealing with, that their OmniSource division, which is recycling, will have lower profits in the third quarter versus the second quarter, as prices and volumes have declined. These are tough times across the recycling industry. Related, we learned that CAT has ended its material handling agreement with Exodus, and 2 other major equipment suppliers to the recycling industry have suspended production. Copper rose 4 cents to $2.20 a pound, mainly due to the U.S. Federal Reserve released that they would not raise interest rates. This weakened the U.S. dollar, making commodities like copper trade higher. The 5-year copper chart shows that, like many other commodities which have gone up and down in the past year, they are really the same where they were a year ago. Aluminum followed copper and rose 3 cents, finishing at 73.7 cents for the week. And now we're seeing that aluminum inventories declined due to some production cuts, but very slow demand increases. With inventories dropping, we would expect prices to remain somewhat steady for aluminum. The U.S. Purchasing Managers Index for manufacturing had its growth rate decline to 51.4. Over 50 means growth, so manufacturing is still growing, but at a slower rate. A key reason for the slowing were fewer orders for exports. Housing starts ended August, dropping to 1.14 million, worse than expectations. There remains major upside, though, in that in 1972, when the U.S. was much smaller, housing starts were 2.5 million, much higher than today's 1.1. Initial jobless claims hit a 2-month low at 252,000 and have been below the key 300,000 level for 81 weeks, the longest stretch since 1970. This is great news for the economy, which will help stabilize commodity prices. With that, we hope all have a safe and profitable week.